Legendary footballer Pele died at the age of 82 after a long battle with cancer, marking the end of an era. The Brazilian is the only player to have won the World Cup 3 times. The Brazilian government has declared 3 days of national mourning in his memory. You're with us here on a fresh new edition of Bazaar Morning Call. I'm Prashant, with me my colleague Sonia and Mangalam. End of the year and end of a glorious chapter as well, right? I mean, in football history, we talk about who is the greatest of all time, but I think about this, there will be absolutely no doubt, no argument that the greatest of all times, GOATs are all compared to, what Pele did and what he achieved.
And of course, he lived a glorious life, right?
Yeah.
I mean, he rose from pretty much barefoot poverty,
Yeah.
and he rose to become the greatest athletes of our time. So, remarkable life and a life well lived.
He was beyond football, right? He was football, but
Exactly.
I think he was an icon just beyond football.
That's the beauty of, legends. They go beyond their sport, their vocation itself. I mean, not only did he make us love the game and him, obviously, he made us fall in love with the country, Brazil. Most of Indians, if you ask them who do they support in football, it will be Brazil. And Pele has one of the lion's share in terms of the credit that he needs to be taken. He needs to be given for us falling in love with football and Brazil.
Oh, absolutely. Just uplifting character. And as Sonia said, a life well-lived. And, so that's a somber piece of news we are starting with. And pay our respects to the great man.
Make a recommendation here, while you would be watching a lot of Pele football videos, etc. on YouTube and all the social media, there's a wonderful movie on his life which has been made. It's called Pele itself. Go ahead and watch it. I mean, Sonia spoke about him, coming off abject poverty and barefoot poverty, etc. There is a beautiful scene in that where one of his friends actually dies in a drain. It's heart-wrenching, gut-wrenching, but it's a beautiful movie to watch.
All right, that's a recommendation done. Mangalam, thanks for that. Well, let's kick it off then in terms of how things are looking as we focus and refocus back on the markets, right? I mean, we're trading. It may be the last trading session of 2022, but I have to say this. I mean, it's been uncharacteristically, lively, the markets. Volumes may have been dull and you can complain about that, but price action has been lively. Now, strong pullback is what we've seen overnight in US equities. You've got the S&P, which is up strongly. You've got the NASDAQ, which is up strongly. And what is this on the back of? It's on the back of weekly jobless claims, both initial and continuing claims, which came in line with expectations, maybe a little softer than expectations. Markets coming off kind of depressed levels, volumes are low, pointing to this data point and saying, well, the economy and labor market particularly, right? I mean, the number one problem for the Fed has been the fact that labor market still is very, very strong, even as other parts and other indicators are starting to slow down. Skeptics would still argue that these are weekly numbers, right? I mean, so in a week, anything can happen. So should you rely so much on it? But for what it's worth, last night we saw a reaction to this. Yields were lower. The 10-year was down 6 basis points. Dollar, that's under the 104 levels, the dollar index, that is. On the Nifty, we find ourselves, in the Indian context, we find ourselves in a pretty interesting juncture. So the Nifty retested the trend line from the June lows and actually closed above it. Actually, we'll put out a chart at the end of it which kind of explains this. So 3 numbers to watch. The trend line level now is 18,230. I mean, where today, because it's a rising trend line, so today as compared to yesterday is a little higher. So 18,230 is point number 1. The next is the 50-day moving average, which is a little higher than that, 18,250. So that's a 50-day. And then you basically have the 50% retracement of the entire fall from the all-time high of 18,887, which was made on the 1st of December this year, to the low on Monday, that is the 26th of December, this Monday. The 50% Fibonacci retracement is 18,330. So 3 kind of levels on the upside to watch. On the trend line, 18,230, then you've got the 18,249 level, and then you've got the 18,330 level. These are all near-term kind of indicators, and the market has been trading beautifully, within this kind of framework, retracements and moving averages. Bank Nifty is looking much stronger. As of yesterday, it is already closed above its 20-day moving average and the 61.8% retracement of the entire fall. I mean, so when an index does this, you basically are, the bearish signs are over, at least for the Bank Nifty, I would say, and things should look up. Basically back from where the market fell is what I would say. Now to the charts, which I think beautifully explain the story. The first one is that trend line I was talking about, all the way from the lows of June. 15,183 was the low on the 17th of June. There's a touch point on the 30th of September. And then you look at what happened. There was a breakdown below this 5 or 6 sessions back. As of yesterday, I don't know if you can kind of see that, but we closed above this level yesterday, above that trend line. So, the fact that the market is above it does give confidence, although bulls would want that level to hold. The second one is that retracement I was talking about. I don't know if it's very visible, but the one to watch, the one you want to watch is that the horizontal line in between. It's a retracement, as I said, from the all-time high to the low that we saw on Monday. And the 50% retracement is the middle horizontal line. And that number is 18,330, which is the next kind of resistance to watch out for. In between where the market closed and that 50% retracement, as I said, is the 50-day moving average, which is very, very close by 40, 50 points away from here. So just chartically speaking, I mean, as they say, picture is worth 1,000 words. And it does do the job of kind of reinforcing some of these levels. Sonia, hi.
Hi, morning. And, since it's the last day of the year, we must reflect on the year gone by, right? India has had a big degree of outperformance compared to its global peers. And not just the headline Nifty index, which is up about 5% at a time when most global indices are down anywhere between 10 to about 20 odd percent. Not just the US markets, but, Asian markets like Hong Kong are down 15%. Nikkei is down 9%. But if you look beneath the headline Nifty index as well, it's been huge outperformance. I haven't put the data here, but the Nifty Bank is up over 20%. The Nifty Metal Index is up about 21 odd percent. So the big question that we're asking is, will this outperformance from the Indian markets continue? Now, purely for today, of course, the Nifty has been consolidating within this band. It's a very narrow range. Perhaps the street is waiting for more cues as we head into the new year. The range is between 17,800 to 18,200. And Prashant spoke about the levels. The most important one for me is the 50-day moving average of 18,249. However, the flows are on the muted side. Once again, DI has bought just about 500 crores, but FIIs have been selling consistently. In fact, FIIs have sold now for 5 straight days, and about 3,500 crores has been pulled out of the cash markets from the foreign community in the last 5 days alone. And hence, there's a lid on the market's gains in the very near term. The next big trigger, of course, is 2 things. One is the quarterly earnings that come out from the first week of January. You have the auto sales as well on the 1st of Jan. And this morning, global cues are strong. The Dow ended almost 350 points higher, and the SGX Nifty is also indicating a start well in the green. So 2 big questions we're asking. 1, will the outperformance of India continue, which in all likelihood it could? And 2, is the worst over in terms of the sell-off, which I guess it is, given the kind of, levels that we're looking at. But what else are you tracking?
Well, it's good to look back on the last day of the year, but also important to look ahead on the last day of the year. So I'm looking at the January series, because yesterday was the end of the December series, and now in terms of F&O, we've already entered 2023. So to all the F&O traders, wish you a very, very happy new year already. Jan series usually hasn't seen big moves on either side, because if you just take a look at, the average moves in the last 5 or 6 January series, you would see that the moves are not any more than 0.5% to at best 1% here or there. And that's because volumes start to build up only in the second half of the January month. December saw a decline of almost 293 odd points. This after a rally of 1,700 points in the preceding 2 series. I mean, if you just take a look at October, 900 points on the Nifty in that series. November, we had around another 750 odd points. So some gains were given back on December in the December series. What's positive is that the rollovers or the conviction of the players is still the same. The 3-month average has been 79% for the Nifty rollovers. Into January, it has been 79% itself. The Nifty starts relatively on an even footing with 1.05 crore shares in open interest. But what's most interesting and it would keep the bulls excited is the fact that FIIs are starting the January series with just 57% long positions. That means there are shorts in the system, and they would support the market were they to not get any follow through on the downside. We started December series with the FIIs being long 77%. So most traders were on one side of the game itself, and as a result of which we saw the weakness that we saw in December. November and October, we had some shorts in the system, and we did see big moves out there. But what are the important triggers for the Jan series? Sonia, you alluded to the third quarter results. I'll be looking at the management commentary as well, how the festive season panned out, how things are looking thereafter. Pre-budget expectations, the chatter starts somewhere in the second half of January. So to that, the markets also keep moving. The second half of December was also volatile because of COVID-related issues. So we'll keep a small eye on that one as well. And we're still not out of the woods when it comes to global central bank action and commentary coming in from there. So we'll watch out for the macro data too. So with that, we can say hello, January 2023.
Okay, well, say goodbye to 2022, right? Before we start the show, let's tell you what's lined up in the first half hour of the show. We'll get you updates from the markets across the globe, and Abhilash Narayanan of Standard Chartered Bank will be with us to discuss the global trade setup. Later, our research team will bring you the top stocks to watch at around 8:30 a.m. We'll do a fundamental stock analysis with Anand Tandon. Post that, you have momentumizers that will follow to decode the stock rally that we've seen. All right, so first up, let's get you some opinion coming through. On the equities front, we have Wendy Liu of JP Morgan, who reiterates China as their key overweight market in MSCI Asia ex-Japan, with a preference for internet, consumption, energy and industrials. She says India and ASEAN could be among the funding sources. Adds that over the past 2 months, the days of China reopening news have seen the weakest performance in Indonesia and India. She says market sectors with large global growth exposures may also see outflows in favor of China growth exposures in early 2023. So banking on China in a big way.
Well, let's get you some money market views. Bhaskar Panda of HDFC Bank says, as we approach the end of the year and markets remain illiquid against expectations of US Fed not pushing interest rate button as aggressively as it had done recently and the dollar index shedding weight, we could expect Asia ex-Japan to do better, especially after China's change in COVID policy. He says oil prices remain stable but trade persistently above the $80 per barrel mark. Given this background, he expects the dollar INR pair to trade in a range between 82.65 to 82.85 for the day.
And on the bonds, Bhaskar Panda says that Indian bond yields have been steady and range-bound. He expects the same trend to continue today as well and expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.35% for the day.
All right, and on the last day of the year as well, we managed to eke out a lot of stocks to track today. We'll get you all of them in just a bit in our special top 10 segment. But for that, just give you a recap of what we're watching out for. Eicher Motors, Craftsman Automation, Reliance Industries, Cipla, Supreme Petrochem, SBI Card, Punjab and Sindh Bank, City Union Bank, as well as Satin Credit Care on our radar on the back of positive news. And DLF is the only one which is likely to open in the red.
Okay, all right. Abhilash.